Welcome back to Crypto Bliss. Today, we're tackling a hot topic. Is Bitcoin facing an imminent bull trap? We'll break down the charts, the on-chain data, and what it all means for long-term investors. Let's jump in. A key factor in understanding a bull trap is low volume on breakout and failure to stay and remain above the resistance level. Let's together identify the signs of a bull trap. So it certainly requires a keen eye for certain market indicators. Now, you need to be very specifically vigilant on price movements and patterns that suggest a potential trap. Volume, absolutely a clear indicator, as a lack of sufficient buying interest can signal a false rally. Always watch for the volume. I say this on my channel all the time. So first of all, watch for low trading volume during price increases. Look for rapid price spikes followed by sudden declines. Pay attention to market sentiment shifts and new releases. Analyze chart patterns and indicate overbought conditions. And use technical indicators such as the RSI to gauge market momentum. So what exactly does a bull trap actually look like? Well, here you go. What is a bull trap and how to avoid it? So first of all, as you see here, bull trap continues to go up. We spike through the resistance level, and then soon thereafter, we have a massive pullback here. Now, I've spoken about these railway candles on my channel so frequently. It failed to keep above the resistance level and it closed below the resistance level, and therefore it will come back down to support level. Then that's the first one. That's the first bull trap. And then usually you can have another bull trap, somewhat making a little bit of a higher high here with consecutive higher lows. Do you see how important it is to actually look at the chart and what the chart is telling you? So the bull trap, okay, again, pump through the resistance level, break back down. So cool, all well and everything, really. I mean, honestly, taking profits on a candle like this is amazing, because usually the following day or the next day thereafter, we have a massive bull trap. And sometimes it can even break through the support level, bam, on a massive candle, creating lower lows and lower highs. And there it can probably, they'll have a lot of buying opportunity coming back through at that support level, bringing the candle back into the trading zone. Another example, you can see a supply. Okay, so hit the high, another low. Okay, you can see your entry on a short, boom, take the short. So the recent Bitcoin price action and tech signals. Well, Bitcoin recently pushed past 110K, but slid back towards 104K yesterday. So Bollinger Band expansion around 109K at the top and lower band near the 102K, which is vulnerable. A classic sign of absolute indecision. So there's an escalating Middle East tension that is currently happening, and a bearish fractal could push BTC under a 100K level. This is a classic soft reversal point after an uptrend. Expect a short-term correction or consolidation below 108K. And of course, you'll see here, we're actually sitting at 103,784. Now, let's talk about the Bollinger Band, okay? Look at what the Bollinger Band has done here. And I'm going to show you some stuff shortly. Look at the bear trap. We punched up, creeped up, boom, breakout out of this bull flag, punched up above the Bollinger Band. The next few days, we had the market kind of sit sideways, and then we had the next break up to the top of the Bollinger Band. And look at the engulfing candle, sucked liquidity right out, okay? Boom, at that peak all-time high, because that's the Pico all-time high at this moment. And really slide down, consume these candles, retest, absolutely nothing. Honestly, if you see this kind of thing happening, that's your point. Exit, get the heck out of the market, okay? And then you'll have a bear trap. So the same thing is busy happening here. Okay, it's not quite there, but it is a bear trap. And so the Bollinger Bands on the top end will tell you, but right now we're actually closer towards the bottom end, and the bottom end of the Bollinger Band is sitting at the $101,530 mark. Honestly, early next week, I would like to see us at least above the 106,000 level, the median of the Bollinger Band. That would tell me that we will then continue up. Anything sitting underneath the median of the Bollinger Band means that the Bollinger is going to ride down. Now, there's some important information that I'm going to share with you next. Bitcoin, of course, has a price fractal point to bull trap that could send BTC below 100K. There are signals to just be thinking about right now. And honestly, we have an incredible journey ahead of us. So just be patient, and that's all you need to know right now. Just DCA, dollar cost average, and accumulate these assets. You're welcome to use my Bybit link down below. Get yourself up to $30,000 deposit bonus. And look, all I have to say to you right now is my Ethereum trade is down. We've been bleeding here. My Bitcoin trade is somewhat a little bit down. Not the end of the world. I exited my XRP trade. I got stopped out of my SAY trade, as you know. So I'm only going to stay in BTC and Ethereum right now at this point. You ask me why? Well, honestly, Bitcoin is the leader here, and Bitcoin dominance is telling us a very, very powerful story. First of all, Bitcoin, you can see, created a bear trap and another bear trap and another bear trap. Okay, so right now the only thing is that our stochastic RSI is hitting the baseline. The MACD is somewhat crossing over. Momentum seems to be dying from this peak to this peak, which is not a good signal, and that's telling us that the volume isn't doing so well. So I heed you with words of caution now, because actually, if you have a look at the 200 moving average, the 200 moving average is sitting at the 74,800 level, okay? That would mean that Bitcoin from current prices down there would probably drop around 30-odd%, 28%, okay? That is a huge possibility still on the table. Don't think that it isn't. And unfortunately, if it does do that, well, then, my friends, then we're creating a M pattern here. And an M pattern could actually bring us even way lower down, probably around this kind of level. I mean, we're probably looking at possibly the 42 to 43,000 level. Although, guys, I wouldn't get it too ahead of ourselves on that. And here's why. Look at the monthly, okay? The monthly on the stochastic is only just starting to turn around, okay? That's a very good signal on the stochastic. On the momentum, on the MACD, we're pushing up, but we really haven't got the buy volume that really Bitcoin does deserve to be seeing right now. The Bitcoin dominance, as you can see, is very much at 65%. That is huge. Now, the longer Bitcoin dominance continues to go up, and I did say to you almost a year ago, if not longer, that we would probably come somewhat into this area. We tapped into this area, we've continued to go up, and we are now at the top end of my area, my zone that I pointed out for you. Very, very beautiful, right? I still believe that if Bitcoin continues to go up and gets the dominance going, honestly, we will probably come up to the 72% level. Once we're at the 72% level, maybe we have an altcoin season, maybe we don't. I don't know, but in all fairness, Shoskum Buskers, it's quite a thing, right? So that isn't the top of the market anymore. That becomes the top of the market, and that can remain the bottom of the market. Okay, we have a long way to wait. So just be patient here in the market right now. That's all I'm here sharing with you to do. You can see that China begins a currency devaluation and is more than just an economic signal. It's a trigger. Co-founder of asset management 21st Capital. Okay, so what you want to look at is how Mr. Arthur Hayes has Bitcoin broken the 4-year cycle. Well, let's hear what he actually has to say, because maybe the 4-year cycles aren't actually what they seem to be anymore.
Do you think we've broken out of the 4-year cycle? I don't like to use number of years cycle dogma. The cycle is what the cycle is. All I care about is how much liquidity is being in the market. What's the expectation of the market going forward? What's the future discount rate of liquidity, and how does that change versus where you think the market's going to go?
And so, as we touched on in the beginning of the conversation, your big prediction, Bitcoin to 1 million. What was your time frame? Was it by
At some point between now and 2028?
Okay. And do you think we'll have a sustained bear market after that?
Of course.
Yeah, I mean, the degens are going to degen and they're going to crash out, and just the whole thing just plays out again. It's all psychology.
Exactly.
So, but do you think that it may play out differently this time, just kind of given how much more liquidity, institutional interest there is in the market? I mean, obviously we have a ways to get there if things play out as you foresee. But yeah, I'm just curious, so you think that we'll have cycles, but maybe not the typical 4-year cycles that
we will have a cycle, and I think it will depend more and more on expectation of fiat liquidity printing.
Okay, it's all about the liquidity, baby.
That's all I care about.
Right now, BTC is lacking top of the market on-chain signals, but volume divergence suggests caution. Rising price on falling volume is a red flag. Okay, that's you just need to be very much aware of. On-chain active addresses are near 950k and hash rate records at a high of 350 EHS. Signal long-term network strength. However, bearish analysts from 10x Research see weak technical support around key levels and cautioning risks of a slide toward 73k, which is exactly what I've just said to you, and it's exactly why you need to know where we're positioned at this point. Because cool, right now double top with fake breakout, so we hit that one, we've made it higher high here, boom, we could come back down a little bit, but who actually knows? Right now we've really been bleeding. I think we could have hit the first level. Look at what happens. We could go down one more level. If we go down one more level, my friends, we're very likely going to go to 73, 74k very, very fast, and then be bought right back up. So just remember here, the Bitcoin total new addresses, as you can see, are currently around about 900, just under 900 actually at this moment, okay? When we have an influx of new addresses, that tells us where the cycle's going up, smashed into all-time highs and breaking at the top end of the bull cycle. We, since the previous all-time high, have actually been coming down in Bitcoin addresses, okay, active addresses, which means that we still have all of this bull cycle new active addresses increasing, which is starting to happen. You can see we've double bottomed out here. We can see we'll be heading up. My friends, once we start getting new active addresses, like you just heard Arthur Hayes say, man, we could head to $1 million quite easily, very quickly. This is a, bull trap. This is a bear trap, boom, and then the market shoots up. Now here's the interesting thing, right? How do you actually spot it? Well, I've showed you how the Bollinger Band works. You can see if it incurs an extreme upward move. Right now, if you spike up above the top and you pull back down and it closes below the top band, boom, you're going to have selling prices coming in. And that's just what the charts say. Doesn't mean we're bearish right now, because right now we're actually having a decently strong bounce off of this very important 103,000 level. And if we look at the 103,000 level, look at where we're bouncing off of. A very sturdy support level from the highs of December 24 and January 21st, pretty much. So, my friends, cool. We could come down. Like I say, we could even come back down to this demand zone all over again and create another higher low. Will we do it? I'd love to know what your thoughts are down in the comments below. For me, I don't think so, but I could be wrong. But here's why I believe so. And first of all, we're still in this phase here right now. The next phase is a godlike candle that will pump us up into thrill, and we'll probably see a pullback by maybe September, somewhere around there, and then a massive pump for the next 3 months. So October, November, December, we could see a pump, which doesn't quite coincide with my all-time high potential here for October 2025, which is my actual target, right? it doesn't quite coincide with that, because if I'm saying it's going to pump from October, November, December, well, my friends, then there's 3 months of pump and the all-time high could be beyond that. I reckon we're going to see godlike candles because the federal governor just said interest rate cuts could begin as early as July, which is next month. So here we go. The money printers will be turned on. The debt spiral continues to increase. We've just gone past 37 trillion, and this, I mean, look at it. Look at this. We're already 6 billion down the drain. So the billions and the billions and the trillions keep getting printed into existence, and your value of dollars keep depreciating. And that's why you should be subscribed to the Crypto Bliss community. But before I move on, what is the long-term view and conclusion? Well, long-term case remains strong. Institutional interest, ETFs, macro uncertainty, and dollar weakness and diversification needs. Recent crypto ETF inflows and possible US Bitcoin reserve policy continue to provide tailwinds, but complacency is dangerous. Expect corrections of 20 to 30% even in bull cycles. The bottom line is this could be a bull trap. If you're a long-term bull, then use DCA and wait for confirmation and be prepared for any volatility that may occur. Now, really, if you found this useful, hit the like, subscribe, ring the subscription bell, and let us know your comments if you are buying the breakout or dollar cost averaging, or if you're waiting. So thank you for being back with me on the Crypto Bliss community. I appreciate you, and we'll see you on the next one.